So I was speaking to a client this morning on a property tax consultation, and they had a question around incorporation. So they had 3 properties in their own name, husband and wife, owned 50-50, both had full-time jobs. And the question was, we're both now higher rate taxpayers. Can we incorporate this portfolio? So what we mean by that is moving it from personal ownership into a limited company. So it's very interesting actually, because the conversation was more around how could we do it? And the first option they had in their head is, well, surely we can just do this tax-free. I had to break the news that it's most likely that you can't do that. However, we then found out that either one of the couple had lived in one of the properties. So we came up with this plan with the numbers and everything else that checks out to eventually move the first property that they used to live in first, because they get more capital gains tax relief, and then later on, at a later stage, they'll move the other property. So the reason that we chose to do this with the calculations, the break-even point was at a comfortable level for the client. I think it was like 3 or 4 years, something like that. They had a longer-term view with property, so they're obviously doing this to, you know, future benefit their children, etc. So even though they have to pay tax to get the properties in, it's still a great result for the client. So if you have got questions around incorporation and you might not be able to get incorporation relief for whatever reason, then don't rule out moving the properties and paying tax, because overall it might actually be the best thing for you and your family.